Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, September the 13th, 2010, and it's time to open your eyes. Check this out. Okay, before we get started, we got a lot of stuff to announce today. We broke through 2,800 subscribers today on our YouTube channel. Thank you very much for that. I appreciate all that support. Helps us stay free. Thank you very much. If you've not already done that, please do that. We've actually been able to do that because you guys have been sharing our videos online and referring your friends and so forth and so on. We really appreciate that. So thank you very much for that. Now let's get to the markets. Okay, the market was up today. All right, that means price activity was higher by the close than it was on Friday. Does that make me a bull? No. It makes me want to be a bear even that much more. If you look at today's market activity, especially looking at the NASDAQ, you can get a really clear picture of what's going on here. The NASDAQ was up 43 points for the day as it closed. The problem was 3/4 of that move was a gap. So we just have another reason to dislike this move to the upside. Gaps get filled, plain and simple. Look on your chart, go back test it. Unless we're talking about an exhaustion gap, I'm sorry, a breakaway gap, which we're not. We're talking about exhaustion gaps, and those guys get filled relatively quickly, short term. So we have 1, 2, 3, 4, 5, 6 of them on the chart now. And if we go back a little bit more, we find a sneaky one over here. Oops, over there. Yeah, 7. Okay, we'll talk about this longer term chart in a minute, but the main thing I want to point out here is that price activity does not change the analysis. The analysis is the analysis. You simply find another position to go out there and add to a short position. We started late last week shorting. We expected this market could push higher before it peaks out. We're using that further advance to find more key opportunities to short. We did that this morning, and we'll do that again the next few days probably. It's just a good opportunity out there to go find those opportunities. Very overextended or very oversold if you're talking about an inverse ETF or something like that. So I like this market the way it's behaving. It definitely makes sense to me. And the main thing I want you to take into account here is that gaps, whenever you're looking at a chart, especially one that's got as many gaps as we're looking at here, what you're talking about is the foundation of your advance. It's like building a house. If you go out there and you build a house on sand, it's just going to get washed away. And as one of our users, or one of our members talked about, he said it was an advance on air and the sell-off is on high volume. I love that analogy because it's so true. That's how it happens. And in this case, you've got so many gaps in here, you just cannot be a buyer here. Let's try and be a bull. Okay, let's think this through. I'm going to buy today because the stock is trading above the upper Bollinger Band line. Now wait, that doesn't make any sense. You're supposed to be buying down here at the lower Bollinger Band line. I'm going to buy today because the slow stotch is at the 20 line. No, it's not. It's up here at 93. It's oversold when it gets down below the 20 line, so we can't buy because of that. I'm going to buy today because there's no gaps in the chart below us, and it looks like a strong advance. No, there's 6 gaps below you right here, 7 if you count this one way back here. Well, I'm going to buy because there's lots of strong buy volume, and that's, tells me a lot of smart money is out there buying. No, that's not true either. If we scroll down and we look, yeah, we've got horrible volume there, right there, and no reason to be a buyer of that at all. And in fact, every time you get a low volume, rally, fail. Low volume, rally, fail. Low volume, rally, fail. Low volume, rally, fail. So we can't buy based on any of that stuff, all right? So what is it people are looking at? Well, they're looking at prices going higher, and they're looking at this point right here, low point, and this point right here, a little bit higher. And they're saying, hey, that's an uptrend. That's awesome. Yeah, it's a trap. Let me show you how you know that. Let's start off looking at this low point of 2024 on the NASDAQ right there. And this low point over here, okay, you can use that. And you trading on up there, right? That's an uptrend. That's awesome. Problem is there's a bearish divergence at the same time period on the slow stotch. All right, to there, low points corresponding to this low point, and it is trending down for the same time period, okay? While price activity is trending up. That means price activity is lying to you. You want to use the bounce as a short opportunity, okay? Because this is going to break down below this level like it did on the slow stotch. The slow stotch broke below this level, price activity will break below that level. That's how the divergences work, okay? So let's see what else we got. Can we get some confirmation out of that? Oh, yeah. Here we have those same low points, 2024 and 2061. All right, uptrend right there. But the price activity corresponding on the MACD, oh, downtrend. RSI, oh, downtrend. Yeah, it's all a trap. It's all a big fake trap. I don't care what they tell you in the news. You want to use the bounce up here as a short opportunity. that's what's going to happen. You're going to see price activity break down below this level. This 2000 level is going to fall below that and close below that. You know that because you just showed it to you on the slow stotch. We just showed it to you on the MACD, and we just showed it to you on the RSI. That means the only thing that's not in line yet is the price activity. So if you're looking at price activity thinking it's a reason to go out and buy, you're wrong on every single count. By the volume, by the gaps, by the slow stotch, by the overbought condition of the current slow stotch being over above the 80 line, by the fact that you're trading at the upper Bollinger Band line, there is absolutely zero reason to be a bull in this market. I've stated my case. Okay. I don't really have any updates to add. All the other markets looking exactly the same way. You can go back and watch my analysis from Friday, or you can just look at this market and say, hey, wait a minute, man, we're being played here. You need to be using the bounce as a short opportunity, okay? That's the smart trade. And then be patient. That's really all there is to it, okay? Was I wrong here? Let's see. Was I wrong here? No. Was I wrong here? No. Here, 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 or now here? No. Okay, I'll see you down here. All right, if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, over the weekend, I put out a whole bunch of videos on technical analysis to show you how to do what I just did in front of you, show you what that stuff means, to show you how to use those counter trend bounces. All that stuff is there in our chart school in video format. You can learn everything from the basics, even some trading techniques we taught you in video right there. Very cool, very easy stuff. And also, we tossed out a watch list in video showing you what stocks to be watching this week. We'll do that every single weekend, so check that out. Have a quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, enjoy your evening, and trade smart. Even if you want to be a bull, find a good opportunity to do so. This is not one, okay? Awesome. Take care.